The profit planning spreadsheet has 13 tabs, 9 of which are going to be automated for all of our reporting dashboards. 4 of the tabs are going to be your in-use tabs, which are going to be what you're using on a monthly basis to do your profit planning, your budgeting, and to track all of your income and expenses. Now, I'm going to walk you through how to use those 4 tabs in these next couple of videos, and then we'll save a last video for all of the reporting. Now, the very first place that you'll start when you receive your spreadsheet is going to be the setup page. The setup page is where you're going to tell your spreadsheet what your income streams are going to be, what your expense categories are going to be, and it's going to allow you to set up all of your balance sheet accounts inside of the spreadsheet. And when I say balance sheet accounts, I need to be more specific. It's not going to be all of the available balance sheet accounts. It's going to be specifically your loans, your lines of credit, your credit cards, and your bank accounts. So when you go to the starting page or the setup page, the very first thing that you're going to do is choose the year that you are actively in. Now, you absolutely can go into the spreadsheet in the transactions tab and you can do all of your bookkeeping for all of the prior years if you would like to, but you're still going to choose the current year as your starting year. The reason is because this is a 5-year spreadsheet. The profit planning and the budgeting is going to be based off of the year that you place here. So if you do 2022 as your retroactive starting year, but you are actually in 2024, you're going to lose out on 2 slots for your budgeting and for your profit planning. So instead, use the year that you're currently in, so all of those current features that you're going to use are available to you. Like I said, you can still go in to the transactions tab and do all of your prior bookkeeping, but you're going to use the year that you're currently in as your starting year. Then from there, you're going to choose your income streams. There's a few ways to do this. You can do income streams as simple as your sales of service versus your sales of product. You can separate your income streams by location. So if you are selling on Shopify and Etsy and you're selling an in-person farmers market, or if your business has multiple locations, you can use all of those as income streams, or you can do income streams depending on department. So if you sell, just for example, shirts, and you also happen to sell, gosh, massage guns. I don't know why that came to my head, but if you sell all of these different types of things, you can categorize your income streams in that way as well. Just be mindful that the income streams that you choose are going to show up on your income statement. So you're not going to want to be too detailed because your income statement will be very long, but you want to separate them in a way that's going to be helpful for you when you are reviewing the data. Now, you're going to set up your expense categories as well. And when you do this, you want to think of it in 2 ways. One, what is going to make the most sense for my CPA? And what is the most helpful for me when I'm reviewing the data? So one way I like to start to do this is look at what expense categories are common for your industry. You can also look at what the Schedule C is on the IRS's website if you want to see what common deductions are for businesses or whatever type of tax return you're using, whether it's a 1065 or a S Corp or a C Corp. One thing I do need to note, though, is that this spreadsheet does not provide a balance sheet. So if you are a partnership or if you are an S corporation, you are not going to have a balance sheet that is needed for your tax return. So this spreadsheet is best for sole proprietors or for owners of LLC that are the single or sole owner. Okay. So moving on from there, you're going to do your banks and credit cards. And what you're doing is essentially telling the spreadsheet what type of banks or that you currently have, which credit cards you currently have, and which loans you currently have. So what you'll do is you'll add the name of the bank, the loan, or the line of credit or credit card. You're going to put the starting balance. So if you are starting the spreadsheet, one thing I forgot to note is that you're always going to choose the first of the month here for your starting date, okay? This is a calendar year spreadsheet. So you're going to put the starting balance, but you're not going to put the starting balance today. You're going to put the starting balance for the first of the year because that's when your bookkeeping starts. So go into your bank account, look at your prior bank statements and see what the starting balance was as of the first of the year. Now, if you do not care to track your current balances on the spreadsheet that we do have available in one of the dashboards, and then you don't need to do this. But I do recommend that you do it because it's very helpful to make sure that you have gotten everything from your bank statement if you can see your current balances in the spreadsheet. So you'll put whatever the starting balance was either for the first of the year, or if you're starting your brand new business today, then you'll use whatever the balance is today. And then you're going to choose the account type. Now you have 4 options available to you. You can choose a bank, a credit card, a line of credit, or a loan. And then the final column is going to be what your goal balance is if you have a bank or a credit card. And then if you have a loan or a line of credit that you're entering, it's going to be what the original total loan or line of credit was for. So if I have a bank account and I want to hit $10,000 in my bank account, then that's what I'm going to put for the goal. And then I'll put what the starting balance was at the start of my bookkeeping period. And then if I have a loan or a line of credit, let's say I took out a $50,000 loan, my current balance is $10,000, then I'll enter $50,000 as my starting loan here, and then I'll put the starting balance here in column C. Okay, so once you have everything set up, you can begin your profit planning. So that's going to be the next tab over. And a couple things to know about profit planning is that you may play around with this quite a bit at first until you find the ratios that are going to work out best for you. And the more that you do your bookkeeping, the easier this is going to become, because you'll become more familiar with your expenses in your business. When you do some analysis of your expenses, when you're doing your budgeting, you'll know which expenses are absolutely necessary for you to continue the level or the experience that you are providing to your customer, and what is absolutely necessary for you to run your business. That is our goal here, is to eventually get to a point where we are only spending the money in our business that absolutely needs to be spent, so that we can keep the rest of the money for ourselves, or save the rest of the money for large asset purchases that we want to purchase for the business, or whatever you want to do with the extra money. But the goal here is to get into a habit of minimizing or not overspending in our business. So the first thing that you'll do when you do your profit planning, we're going to focus on the left side of the screen here, is you're going to choose what your profit retention goal is. Now, you can make this grand or you can make it minimal, but I'm going to do this with you so that you can see what's happening here on the right hand side. So I'm going to start off large. Let's say at the end of the month, after I've paid my set aside money for my estimated taxes, after I've paid myself and I've paid my marketing and I've paid for my operating expenses, I would like to have $10,000 left over. And of that $10,000, the easiest way to think of this is in terms of a single dollar. For every dollar, how much of that would I like to retain as profit? So let's say for every dollar, I want to retain 10 cents as profit. So I'm going to put 10% here. Now, what you'll see is on the right-hand side, a highlighted yellow box popped up with our revenue goal. This is where we're going to start. The first thing that you're going to do is you're going to work with this profit goal and profit percentage, and you're going to see if the revenue goal that the spreadsheet gives you is attainable for your business. Now, if my monthly revenue goal for January, and keep in mind you have a drop-down menu here, so if you're looking at the wrong month, just go to the correct month here. If for the month of January, my revenue goal is $100,000, I'm going to ask myself if that's achievable. If the answer is yes, I can continue with my profit planning. If the answer is no, I need to reduce my expectations here for my profit retention. So let's say I want to keep that 10 cents per dollar for profit, but I'm going to make my profit goal $3,000. Now it's telling me that I need to earn a gross revenue amount of $30,000. Is that achievable? Yes. So now I can continue. Now, let's go to taxes. I recommend reaching out to your tax professional and asking them how much you should set aside for estimated taxes percentage-wise of your revenue. They can give you what that value is going to be because they know your unique tax situation. But if you do not have a tax professional that you work with, or you just don't want to reach out with them, the general percentage people like to choose is 30%. Don't ask me why. That's just what people like to choose. So we're going to do 30% here. Now, this is not tax advice. I'm not telling you to choose 30%. I'm not telling you that it's a good number or a bad number to choose. I'm just choosing it for the sake of example. So what you're going to see happen here in column C is you're going to see this percentage continue to increase. The maximum that you want to hit is 100%. Okay. If it's 95, you have 5% more that you'll need to allocate. If it's 110, then you need to reduce 10% from somewhere. Now, from there on, I'm going to see how much I would like to pay myself. I want to pay myself 35% of every dollar. So 35% of my revenue. I'm going to see 10% for marketing, and let's put 15% for expenses. Okay, so I have my profit planned for the month of January. What I'm going to do next is I'm going to go over to my revenue goals and monthly maximums, and I'm going to play with the numbers here a bit. Now, you have a drop-down menu here in each of these columns or each of these sections. You're going to base these numbers off of either your current revenue or you're going to base these numbers off of your goal revenue. The best option here is going to be, if you want real data, you're going to choose your current revenue. Now, if you do not have any data in the spreadsheet, these are all going to be zeros because you have not told the spreadsheet that you've earned any money. If you want to see just what, if you were to hit your revenue goal, what your maximums would be, then you can use the goal revenue. I gave you both because I want to give you the option to plan, but I also want to be realistic with what you're currently making. So as you are entering income into the spreadsheet, go to this profit planning sheet and continue to look at how the percentages are increasing. Because if we're using your current revenue numbers, and let's say you made 33,000 instead of 3,000 for your revenue goal, your owner pay percentage is going to be higher. The amount that you need to set aside for taxes is going to be higher, and your budget allocation can be a little bit higher, whether you use that this month or next month. So play around with this and use these two options often, okay? So from there, we are going to go to our budgeting. Now, let's say that this revenue goal of 30,000 is achievable. That's not going to be a problem for you, right? So you're going to go to your goal revenue and you're going to look at what your maximums are going to be. So for marketing, my maximum is going to be 3,000. For expenses, my maximum is going to be 4,500. Okay. So those are the numbers that I'm going to use to build my budget. If I'm not sure if $30,000 is achievable, I'm going to choose a number that I think is achievable, and I'm going to choose the budget and marketing amounts based off of those. Okay. So do not create a budget off of a number that is not achievable. That is the biggest thing here, because if you overspend in your operating expenses or you overspend on your marketing, you're not going to have enough money to pay yourself. You're not going to have enough money for taxes, and you won't have enough money left over for your profit retention. Okay. So very important to play with this and find what works best for you. So once you know how much you can spend on marketing and expenses, you're going to go over to the budget tab and you are going to build your budget out for all of your expense categories that you created on the setup tab for your business. Now, those are going to be your maximums for those categories for the month. I highly recommend you try your best to stick with them by using each of these tabs to review, along with the budget report tab that we have available as well. Now, all of your monthly data is going to go into the transactions tab. That's going to be both your income categories and your expenses, as well as a few other like balance sheet items, like your tax remittance to your sales tax departments, your transfers, your credit card payments, your loan payments. Those will go on here too. You do have a directions tab. It's going to have quick questions at the bottom, or quick tips. I highly recommend you read through those, because I've answered many of the how-to questions for some of those balance sheet items for you, and how to do those appropriately inside of the spreadsheet. So transactions tab is very simple. You're going to choose the date of the transaction that it occurred. This is going to be a cash basis spreadsheet, so the date that it occurred. You're going to choose whether it was an income item, an expense item, or other. Income and expenses are going to be billed off of what you've created in the setup tab. The others are going to be items such as your sales tax remittance, your credit card or loan payments, your internal transfers. That's going to be just so that you can track your balances correctly. You're going to have your profit planning, what you're setting aside for taxes. You'll need to tell the spreadsheet that. You need to tell the spreadsheet when you pay yourself, and you need to tell the spreadsheet when you actually make an estimated tax payment. Okay, so that's what all of the others are. So if it's income, you're going to put income here, choose a category, and you're going to choose where the money was deposited. So let's say the money was deposited into my checking account. I'm going to select that. A couple things to note about this spreadsheet. When you are inside of any of these four tabs that you are going to actively use, Anything that is colored is a no-touch section. So it's going to block off this section here because you don't need to use it for the income category here. This total section is also colored. That is going to be an automated section, so you will not need to do anything there, okay? So only use the sections that are in white throughout the spreadsheet. You're going to put the product or service. So what did you sell? If you're just doing summary data, like you're taking all of the income for Shopify for the full month, you can just put sales for the month of January. And then you're going to put the amount. Let's say I earned $20,000 on Shopify. For shipping income, I'm going to put how much I earned or collected from the customer for shipping. Let's say $4,000. That might be ridiculous. I'm going to enter the amount of discounts that I have given to my customers. And when you enter discounts, you're going to enter it as a negative number. Okay, so we're going to say I gave out $300 in discounts. I collected an extra $1,200 in sales tax. And then I paid Shopify, let's say $500 in fees for processing. And you'll get that data from the payout section inside of Shopify if you're using Shopify. And then you can enter any notes. If you are planning to use a receipt system inside of like Google Drive, for example, you can attach the receipt directly to the spreadsheet for expenses, for example, so that those are easily viewable for the future if you need to do that. And I'll create a separate video on the best practices and how to do that for your spreadsheet. So same thing for expenses. I'm just going to do one of those as an example. So on the 1st of 2023, I had an expense. Let's just say office supplies. I paid from my bank account and I bought printer ink. It was $80. Okay, so what you're going to see happen when you choose an expense is the account 2 is going to be blocked because you do not need to use that section for any of your expenses. You're also going to see the shipping income section is blocked because you do not need to add shipping income on an expense. The processing fees are going to be blocked because typically those are not passed to you as the customer, but if they are, you can just add that into the amount here that you see. And then you're also going to have your discounts, refunds, and sales tax. Those are optional, okay? And that's only if you want to track the discounts that you were given on an expense, or if you want to track the sales tax that you paid for an expense, then you will separate those out of the amounts. But if you do not want to use those, you do not have to. You can just put the total amount that you paid here, okay? So what you'll see is the total is going to automatically calculate on the side. Okay, last little couple ones here. I'm going to show you the other section here. And this, you can pause the video here if you choose to, and you can move on to the next one. Or if you want to see me go through all of these scenarios with the other tabs or the other options, then you can do so. So other is going to be items that typically are going to use balance sheet accounts and profit and loss accounts. Okay, so sales tax remittance, sales tax is a liability for your business. It's not income. So if you're going to remit sales tax, so let's say that you collected that $1,200 from your customer and you need to remit it to the state of California. On the date that you do that, let's just, make this realistic, and we'll say 1/31. And this was in the prior year. Actually, just keep it consistent. We'll do 4/30. So Q1, you collected $1,200 in sales tax, and now you need to remit it by April 30th in California. So what you'll do when you actually went and remitted that sales tax, you put the date that you paid the state of California. You're going to use other as the transaction type, sales tax remittance as the category, and the account that you paid from. So if you paid from your bank account, your checking account, that's what you're going to use. You're going to put the product or service or just information about that transaction. So we're going to say Q1 sales tax remittance. You're going to put the amount that you remitted. So we're going to put $1,200, okay? So what you're going to see when you choose sales tax remittance here is that the shipping income, discounts, and refunds and sales tax processing fees, those are all blocked out because you don't need them. If you do get a rebate from your state for sales tax, I do have directions on how to record that in the quick tip guide here, okay? So go through that and read that. Because that will be 2 different transactions on this transaction tab. And then you can put notes here if you want to. If you did download the receipt of payment, then you can use our receipt system to attach the receipt directly here so that you can access it easily whenever you need to. Okay, another type of expense or other option is going to be your credit card loan reduction. So when you pay your loan or when you pay your credit card, oftentimes you're going to need to separate the principal payment from the interest payment. So I have directions on how you will do that here in the quick tip guide. But essentially what you'll need to do if it's a credit card or loan payment, you're going to see this account to open up. So you're going to choose the account that you paid from, and you're going to choose double click. It's not going to show an arrow here. You're going to choose the account that was paid. So if it's a loan, you're going to choose the loan name. If it's a credit card, you're going to choose the credit card name. And then you'll put any details that you need to put here and the amount that you paid. Once more, these are going to be blocked off. Okay, so next up, you're going to have your internal account transfer. This would be used if you are, for example, transferring money from your checkings to your savings and you want the balances on the balance dashboard to show up correctly. Then you'll just record that transfer here on the books. So very simple. Next up, we are going to do the profit planning tax savings. Okay, so two different other types of categories are going to show up for taxes. You're going to have the tax savings option, and then you're going to have the actual estimated tax payment option. So if you were telling the spreadsheet that you're setting aside a certain amount for taxes, whether that you physically do that in account or not, you're going to tell the spreadsheet how much you're setting aside, okay? So if it's going to be tax savings, if you're going to transfer it, you're going to choose the account that the money is coming from. So we're going to say our checking account. Put any detail that you want to put and put the amount that you are setting aside for your tax savings. Now, when you actually go and pay that tax to the IRS or to the state for your estimated tax payments, then you're going to choose the estimated tax payment / annual payment option, and you will do the same thing. You'll put the account that the money was paid from, and then you're going to put the amount that you actually remitted or paid, for your estimated taxes. The last one is going to be your owner pay. This is going to be for actual planned owner payments. So if you paid yourself $900 and you plan to pay yourself $900, then you're going to use owner pay. If you accidentally used your bank credit card or your bank checking account to purchase something for personal use, you will also use the owner pay in that situation. You will need to record that on your books, okay? So that's what the owner pay will be used for. It's any personal funds or any draws from your bank account or from your business accounts. Okay, so that is all of the examples of transactions. If you have further questions on how to do something inside of your actual spreadsheet, send me an email. I am happy to help you out. In the next videos, I'm going to walk you through the different dashboards that you have available to you.